10-year note yields had a wild ride today, rallying all the way up to 4.5% yield early in the session, and then backing off and closing at 433. So that's down about 17 basis points from the high, yet it was still higher on the day by about 4 basis points. A lot happened today. Obviously, a lot of tariff and trade headlines. They were running the day. Also, we got the March FOMC minutes, which suggested that the Fed is very concerned about both inflation and growth, something that could come to play if they're looking to cut rates down the road, and if inflation is too high, they may need to raise rates. So a conundrum the Fed really doesn't want to face. It is on their radar, and they mentioned that in those minutes today. But again, the headline risks around trade and tariff are really what's driving the markets. Risk assets saw a big bid late in the session, which pushed those yields down in Treasury side. And then we saw yields closing at 433, down from the highs, but still up 4 basis points on the session. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com, and you'll see volatility was all over the map. It opened through the roof this morning as yields were rising, and then it saw a bit of a pullback as yields declined. So it tracked with yields today, opening higher as yields were higher, and then as they pulled off those highs, we saw volatility coming off. Lastly, let's talk about what we have tomorrow. Tomorrow's Thursday, which means we get our in-the-moment look at the job market via the claims numbers. We'll also get CPI, which is a key component for the Fed in their forecasting of inflation. And then we'll get a 30-year auction on the heels of today's very strong 10-year note auction. Tomorrow we get a 30-year auction as well as more Fed speakers.